Welcome to Module 1 of Introduction to Private Lending Law in California. In this module, we'll explore the foundations of private lending, what it is, how it works in California, and why the state's legal framework is so distinct. Let's get started. Private lending refers to loans made by individuals or non-bank entities, often for real estate or business purposes. These loans are typically short-term and backed by collateral, such as property. Private lending plays a vital role in California's real estate market, providing fast capital when traditional financing isn't an option. There are several key players in the private lending space. Individual lenders might include friends, family members, or private investors. Then there are private lending companies, often formed as LLCs or funds, that pool investor capital. And finally, we have hard money lenders. These are specialized private lenders that focus on high-interest, short-term loans, usually secured by real estate. California has one of the most regulated private lending environments in the country. This is due in part to its dual agency oversight. The Department of Financial Protection and Innovation DFPI regulates finance lenders under the California financing law, while the Department of Real Estate, or DRE, oversees brokers involved in loan transactions. Private lending may be private in origin, but it is still subject to public law. So who regulates what? If you're lending your own money directly and not using a broker, you might need a CFL license from the DFPI. If you're arranging loans for others, you're likely subject to DRE oversight and licensing as a real estate broker. Both agencies enforce licensing, advertising, and compliance obligations. Knowing which agency has jurisdiction is essential for lawful lending. In California, understanding the difference between DFPI and DRE is essential for anyone involved in private lending. The Department of Financial Protection and Innovation, DFPI, regulates finance lenders under the California financing law, often referred to as CFL licensees. They enforce the rules for companies or individuals lending their own money. Meanwhile, the Department of Real Estate, or DRE, oversees real estate brokers who arrange loans for others. Sometimes these rules overlap, and lenders may need to comply with both DFPI and DRE requirements. Knowing where these agencies' responsibilities begin and where they overlap helps prevent regulatory conflicts and ensures you're operating within the law. It's also important to understand how California law interacts with federal lending laws. California provides enhanced consumer protections under its own civil code and constitution, especially around usury and foreclosure, while federal laws like TILA, RESPA, and Dodd-Frank layer on additional rules. Lenders in California must comply with both state and federal requirements. In California, residential lending, especially for owner-occupied homes, triggers strict disclosure rules and foreclosure protections. Commercial loans are subject to fewer regulations, but they're not exempt from licensing or usury rules. Many private lenders specialize in investment properties to reduce regulatory exposure. Private lending is a multi-billion-dollar market in California. From short-term rehab loans to bridge financing for commercial properties, private capital fills a financing gap that banks often leave open. Southern California, the Bay Area, and the Central Valley all see strong private lending activity, especially in real estate. The California Financial Code outlines the licensing and operational requirements for finance lenders. CFL licensees may charge higher interest rates than the state's constitutional usury limit, provided they comply with all DFPI rules. This code is the foundation of lawful private lending in the state. Let's quickly review this week's key terms: private lending, hard money loans, DFPI, DRE, and the California Financial Code. You'll want to become comfortable with these concepts. They form the vocabulary of the industry. To enhance your understanding of the concepts in Module 1, we recommend the suggested reading below.